Good day, ladies and gentlemen, welcome back to my YouTube channel. My name is Ernest Mampana from Everytime FX Traders, and in this video I'm going to be showing you the strategy that I used as a beginner to at least double my account and actually gain the consistency in the market. Now, without wasting much time, if you're new to this channel, be sure you hit that subscribe button and turn on the notification bell.
Okay, bad guy, but I will never do it. Right now they are watching me doing it. This thing in my hole is like a movie. I knew it and I did it.
Thank you so much for choosing this video, and once again, if you're new to this channel, be sure you hit that subscribe button and turn on the notification bell. Please let me know in the comment section what do you feel about this video, and are you really going to try the strategy or not? Because I'm telling you, this strategy, I've been using this strategy for a very long time, and I remember when I started back in 2017, and when I was starting, it wasn't that easy. It wasn't easy at all, but at some point I had to find a way to make it work for me. So I tried a lot of things, and up until I come up with these guys where they taught me this kind of a strategy. It was just kind of like a beginner strategy, but anyway, it was working. For me, it was working, and like I continued doing it up until like I decided to try something different. At the end of this video, I'm going to tell you why I didn't continue with this strategy, but then this strategy is still working even till today. So without wasting much time, let's get into the strategy. All right, here I am. I have my clean chart right here. This chart is on Euro AUD. So I have my clean chart right here. As you can see, I removed the grid, I removed everything. So to see how to remove everything, I think everyone knows that, but then if you don't know, you can just press Ctrl G and then everything will be deleted. If you want to know how to set the colors, I think there are a lot of tutorials on to do that, but then if you still don't know how to do it, let me know down there in the comment section, so I will show you exactly how to do it. Now right here we are, and we want to create something simple. As we can see right now, let's just assume that we are all beginners, right? As a beginner, you get in and there are a lot of things that are happening, so you need a strategy at least that will direct you on what to do. With this strategy, we're going to identify the trend, and after identifying the trend, we're going to go in straight, waiting for the confirmation. So we are going to be using moving averages, two moving averages, and I will explain as we add them. So the first moving average that we need is 20 MA. So let's just go and insert indicator, trend, and moving average. So we are going to do this 20. Now the 20 moving average will give us the trend on the market. Either it's an uptrend or it's a downtrend. So the plan is this: once the market crosses this moving average, we have now changed the trend. We are looking for possibilities to the downside, and once the market breaks again, we are looking for the possibilities to the upside. So if the price is above the moving averages, then that means that we are looking for possibilities to the upside, and if the price is below the moving averages, then that means we are looking for selling opportunities. Like right here we had this move to the upside, and then the market started correcting at this point right here. But then look what happened. Instead of continue going up, because normally as a price action trader, you will realize that we have impulse and then we have some sort of a correction, then continue with the impulse move. But then with this strategy, it shows that if it's really going to continue or not. As we can see right now, it's been failing multiple times, and the market is still trending below this trend, this moving averages right here. So this can give us an indication of that the market might still continue going down. So as long as it's still below that, we need to be looking for selling opportunities instead of buying opportunities. So that is the first thing that you need to do. You need to have this moving average right here, which will indicate your trend. But then we are not done. Most people would say, okay, it means whenever the market reaches the moving average, I need to react. No, that's not how you're going to react, but that information will be used as well. So the other thing that we're going to add to this strategy is 5 moving averages. Going to insert indicator again, trend again, and moving averages. Now right here, period, we're going to put 5 instead of 20. Choose a different color this time. I will go with red, then I will click OK. So at first I said we identified the trend. Now this one will identify either we should go in or not. This one is our confirmation. How are we going to use this now? Let me take you back, and then we will just look at it as we come. let me start somewhere right here. Let me start right here. So right here you can see, let me zoom once again. So right here you can see the market was below here, and finally with this candlestick right here, it broke, and then right here, that's where they meet. So the strategy works like this: once the 5-period moving averages cross the 20 moving average, then that means that you are looking for opportunities, either buying or selling opportunities. So here it crossed, and then this candle right here, once this candle is done, then we need to be taking action. We are only going to target something around 40 to 50 pips. Look, we are going to go in right here. The reason is this candlestick right here, okay, or the price at this current moment, it was above the blue moving average, and also the red moving average is also above, so we are looking for buying opportunities. Now we will go in right here, and we're only going to aim 40 to 50 pips, right? Let's see, this is 50 pips somewhere right here, so you will be out. Then let's talk about stop loss. Where would you put your stop loss? In this case, as I'm analyzing this pair, I could tell that this one right here we lost this trade, because the way I plan my stop loss is this: the candlestick that leaves, the candlesticks that confirms that it just broke the 20 moving average, then that's the one that we are going to use as a stop loss. Look here, we said this candle is a confirmation that we just broke out of this, and then now we are on the uptrend, right? But then it means that my stop loss will be right here at the tip, right? So look, this was our entry. It came, it got down, it took us out on a stop loss. Right here we have this candle breaking, but then the moving average right here fails to cross. It bounces right here, meaning that we are still continue going up. So we are going to look for this candle now. This will be our stop loss right here. Why? Because this green candle right here is the one that passes the 20 MA. So this candlestick right here is the one that passes the 20 MA, and that is why we are going to use as a stop loss. We're going to put our stop loss somewhere right here, and this right here will be our entry. After this candlestick right here, this will be our entry. So our entry was here, and then let's see what happened. 15 pips, 40 to 50 pips. Let's see. It's right here, and boom, 50 pips is somewhere right there, right? You'll be out right there. So let's continue to observe this. Here is another cross. As I said before, this candlestick right here would be our stop loss, so our stop loss will be somewhere right here, and then our entry will be after this candlestick right here, because here's our cross, and then the confirmation will be very clear that this is a false breakout. Because let us observe this one right here. First of all, this tip goes out and then comes back in right here, this candle right here, all right? And then the second candle also is still not giving us a clear breakout. The third one now is the one that is above this point right here. So we all know that we cannot aim for buying opportunities and still put our stop loss above the 20 moving average. It has to be somewhere below here, so we wouldn't be participating in this type of a trade. All right, here's another point right here. Look what happened here. The market breaks to the downside, giving us this candlestick as our stop loss right here. Okay, now we're waiting the crossover right here. After this candlestick, it means we are in. So we went in somewhere right here. Let's see 50 pips, 50 pips, 50 pips, boom, 50 pips somewhere right there, boom, we are out. But look what it happened, it went straight up until 200 pips right there. All right, that's good. Let's continue moving. Here's another one right here. So although it gave us some sort of a false breakout, but then we can see that the tip is below here, so we can use this as a stop loss. Here would be our stop loss right here. You can see with this candlestick right here. I believe now it's easy for you to spot them. You can see with this candlestick right here. So we're waiting for the crossover is here. After this candlestick, we're going in. So normally what would happen is this: the first candlestick that crosses, after that candlestick, you need to have another candlestick in the middle, and then the other candlestick is the confirmation that we are still continuing going up. So you need to have like at least 3 candlesticks trading above the moving average and the 20 moving average, and also you need to have the 5 moving average period trending above that moving average as well, 20 moving average. That will mean that we are continuing going up. And if the 3 candles are below the 20 moving average, then we're going to look for the 5 period moving average. If it's also below, then it means that we are going down. That's simple like that. I will just leave the notes here so you can read them. It's easy like that. Let's see, this was our entry. Let's go. 40 pips here, 50 pips somewhere right here. See, we are out. Clean, sweet, we are out. So currently we are here. Here's another one, last example. This candlestick is the one that broke the 20 moving average. So that's where we're going to put our SL right there. That's where we're going to put our SL. And then where's our entry? Where's our entry? I said this 1, 2, 3, they need to be there, and then this will be your entry right here. All right, that's your entry right there. And then let's go now. 50 pips, 50 pips, 50 pips, 50 pips, 50 pips is somewhere right here, somewhere around these areas right here. You are out. You just need to take what's yours and get out. This strategy is good for growing small accounts. So if you have like a small account and you want to grow, you can use this strategy. So the other question may be, yo, Ernest, I see you are doing this on Euro AUD. Does it only work on Euro AUD, or is it also working on the other different pairs as well? Let us give that a try. We're just going to do that very quick. First of all, you need to save these templates right here. You need to go to template and then save template. You need to save whatever that is here. So we are going to say like moving av strategy. Save that, and let's move to a different pair. So right here I will just go and load that template. On that template I will select where is the moving av strategy right there. Open. Now we have something like this. Change time frame to 4 hours, of which I will explain later why 4 hours. So as you can see, I don't want to go through all of that, but then yeah, this is how it works. You can see, let's start here. This candle right here is the one that breaks, so we have the stop loss right here, or we can have our stop loss somewhere right here. And then this candle confirms, the confirmation candle, the crossover happened. Now we're going in somewhere right here. We are going to target for 50 pips. Let's go. Boom, here we are, 50 pips, we are out. So let's go, another crossover right here. Let's see which candle crossed here successfully. I think it's this one right here, the green one right here. So here will be our stop loss, a very wide stop loss, and then this would be our confirmation right here. I said 3 candles, 1, 2, 3, counting the one that is also crossing over. So 1, 2, 3, then we're going in. Here will be our entry right there. Let's see how would it. Let's see. 50 pips, 50 pips, 50 pips, 50 pips, 50 pips, 50 pips. Boom, we are in and out just like that. Okay, let's go again. Here we crossed impulsively. Yeah, I like it when it comes to this one right here, because if I can show you all these things that this strategy is good at, and then not showing you the bad side of it as also, You will think that maybe you're going to be a millionaire with this strategy. I mean, if it was 100% profitable, I wouldn't be sharing this kind of strategy on YouTube. But then anyway, I'm sharing it because it's not 100%, you know. So look at this right here. This candle right here is the one that broke. It means that we are going down, as we said. So this will be our stop loss right here, right? Look what happened. We had this candle and we had this candle, which it's here at the crossover. It means that this will be our entry. Somewhere right here would be our entry, and then we are looking forward to go down. But then look what happened. The market just reversed on us and then hit us out on a stop loss somewhere right here. All right, that's how it is. Sometimes you win, sometimes you lose, but then yeah, let's keep on pushing. One thing I like about this is that once it gets you out of a stop loss, it's also going to give you another entry, just like that. So look here, this candle confirmed to the upside. Now the market is trending on the upper side, so we're going to have our stop loss somewhere right here. All right, around these areas we're going to have our stop loss. This will be 1, 2, 3. This is here at the crossover, so the red line is also trending above, so it means that this will be our entry right here. Let's see that. Did it go down? No, it didn't go down. 50 pips. I saw 50 pips somewhere right here. So somewhere right here we would be out here on a profit. Somewhere right there we would be out on a profit. That's how it is. Let's see. I'm trying to be quick on this one, guys. So let's see. It keeps on going up. And you know, if like you feel like, nah, I don't want to go out, you can still go in, like lock in your profit, let the market run, lock in your profit. But then as a beginner, you know, man, you gotta be taking those small profits in order to grow that small account, you know. So this strategy will be good for that. Let's see. All I see here is fake breakout all the way, fake breakout, and we did talk about fake breakout, so I don't want to go deep into it right now because I did mention them on the Euro AUD. Right here again, I'm still seeing the fake breakouts again. So let's see. All right, here is a stop loss, impulse to the downside, 1, 2, 3 right here, and then entry would have been somewhere right here. Boom, hit us out on a stop loss. That's how it is. But then another one here broke out. This would be your stop loss. 1, 2, 3, and then right here, this will be your entry. Let's see. From here, 50 pips. Alright, your take profit will be somewhere right here. Look, we are still out, and the market kept on shooting back to that point right there. Alright, we can go on and on testing this thing. It's really working for me. It did work for me. However, I'm no longer using it, and that brings me to the advantages and disadvantages of using this strategy. It's a good strategy. I really like the strategy, but I'm going to tell you the disadvantages on this strategy. This strategy can only be applied on 4-hour time frame, which means that you're going to wait for days or hours or even weeks to get that confirmation that you're looking for. Let's look at an example right here. See right here, the market was going up and then reversed right here. So this strategy doesn't know if the market is reversing already. Right here, it was a reversal. This is a bearish engulfing. So most technical traders are in somewhere right here. They are in. But then with this strategy, I'm still waiting to see if the market is still continuing. Remember, how do I know if the market has changed its direction to the downside? I'm waiting to see the price breaking the 20 moving average so that I would know, okay, now we have changed. Look, they are in. I'm still waiting. Now this candle is the one that says, okay, we have changed the trend. This is the first candle that I'm going to look at, and then I will put my stop loss somewhere right here. I will aim for that, and then 1, 2, okay, 1, 2, 3, somewhere right here. That's where I will be in. All right, remember, most technical traders right here already, they've been taking their profits to this side. Now when it gets to this side, this point right here, they are also now taking their own profits now. They are taking their own profits now, making the buyers to be hard on the market. Look what happened. It went up. Get me out on a stop loss. And then now, because of technical traders are also seeing this as a sort of a correction, now they are in again for that move to the downside. So that's when I will be making cash from this position. Otherwise, I would be waiting and waiting for something that is not even gonna happen. And according to me, even on this one right here, it was challenging. It was challenging right here for me to go in right here after this stop loss took me out. I was gonna put it right here and then wait. Where? What would be the entry? We don't have the entry right here. See there? So we don't have the entry right there. So that's the first disadvantage about this strategy. You need to wait and wait, and sometimes you can wait for something that is not even gonna happen. Like at this point right here, you need to be knowing what you're doing. I mean, you cannot just go in blindly. You need to be knowing what you're doing. Since your confirmation right here took you out on a stop loss, how are you going to now come back to the market? You need to wait up until the market gives you that impulse move, come back to correct, then that's when you can go back in again. So that's the first disadvantage of this strategy. The second disadvantage is bad risk management, and I think I saw this on Euro AUD. Let's go to Euro AUD. The risk management right here is bad, guys. Like, it's not all the time that is bad, but it's bad. I know it's bad because at some point, well, let's use this one here as an example. You see this impulse move, it broke, and then remember we said our stop loss will be here at the tail right here. So if our entry is somewhere right here, if our entry is somewhere right here or somewhere right here, and we are aiming for 50 pips, how many pips are we aiming to lose? See that's big difference right there. That's big difference right there. See there, 50 pips also. We are aiming to lose 50 pips. We are aiming to target 50 pips. So that's the difference right there. I really don't like how risk management work around this strategy. At some point, it gives you something reasonable, but it's not always the case. Where else with pure price action, everything is just normal. You just going to do that based on the zones and the trend lines that you are being given. So last thing is that we all know moving averages. When you're trading moving averages, there's no way you can identify those impulse moves, and even when it's time for news, you might miss those news. However, if you are just trading without news, it's still the good strategy. Now, what are the advantages of this strategy? My first advantage would be that this strategy is 80% win rate. Like, it has 80% win rate. That one I don't want to lie. I want to keep on that one. This strategy, it works for me. For me, it really works. And then the second one that I want to talk about is it teaches you how to be patient on the market. Remember, on the market, it's all about waiting and waiting and waiting for that perfect entry. And if you master how to wait for the perfect entry, then that's when you're going to be enjoying your trades. So this strategy right here, since it's being executed on 4 hours time frame only, so it means that you're going to be waiting for a very long time for you to get that perfect setup, and of which is what you need to be learning to do. You don't have to just go in and out. You need to wait for that perfect setup before you can go in. This was a very long video, and if you've made it up until this very end, I really appreciate that kind of a support and love. Please let me know down in the comment section if you really enjoyed this strategy. Are you going to apply this strategy or not? You can try this strategy on a demo account. Try this strategy on a demo account, and if it works for you, then that's when you can at least switch up. I'm not saying this strategy will give you the results better than any other strategy out there. I'm just saying that as a new trader or as a beginner, you need to understand this type of strategies before you can move to the complex ones. So yeah, I thank you so much for reaching up until this very end. I really appreciate that support. Be sure to hit that like button, and I will see you on the next video.
I can do it, yes I can do it, I can do it, yes I can do it, I can do it, yes I can do it. telelwa ke jelaswa ke tswalelelwa ba sa nyaki ke thibelela bona nao ke kweletse ba ya ntibelela I can do it of course nkadira